What's going on, everybody? This is Professor Crypto Banana, and I got a special guest with me today. He goes by the name of DynamoDeFi. You got to check out his YouTube channel. He's got a big following. So happy that he's out here. We're going to be talking about what's happening in the crypto markets. Really scary, right? But sometimes it's not, what's happening is what you can do right now. How can you do damage control, how to balance out the portfolio, and even come out ahead based on certain risk strategies. Everything that we talk about is not going to be financial advice, so please always do your own research. But more importantly, Patrick, DynamoDeFi, welcome to the channel.
What's going on, Professor? First off, thanks for having me. Happy to join you, especially when a lot of people are probably wondering, what do we do now? I think anyone who's new to crypto, probably the drop may have come as a shock, even if it's par for the course for some of us who have been here for a few years. But basically, my channel DynamoDeFi is a YouTube channel. I create educational content about DeFi strategies for earning yields, as well as talk about some exciting new projects that are coming up in the world of DeFi.
Nice. So yeah, in case you want to check out his stuff, this is his YouTube channel. We'll leave links in the description. But this guy ain't no joke. He's got over 9,000 subscribers. Soon he's going to be hitting 10K. So something special's got to happen. I don't know what. Maybe if you're
I wish I knew. It'll be a surprise. It'll be a surprise.
But man, that's awesome. Keep up the good stuff. He's got a lot of different videos here. He doesn't just focus on one chain. He's got a lot of different things going. Definitely knows his stuff. So give him a check. But let's talk about the elephant in the room. Crypto ain't looking so hot, Mr. Dynamo. Things are not looking good. I'm not a technical analysis expert right here, but let me tell you, these banana lines are telling me we're going down. Maybe we got, excuse me, maybe we got some major support here at around like the 30,000, which is really scary if you're in altcoins and whatnot. But yeah, this seems to be tanking. What are your outlook on this? Are we in the bear market? Are we done? You think this is just temporary? What are your thoughts?
Yeah, so my thoughts are, first off, this major drop over the past week, of course, it was most dramatic in crypto. But if you look at other markets, I know we just had the SPY up a second ago, especially if you look at the NASDAQ as well, or you look at a lot of tech stocks, those have been getting absolutely hammered. The NASDAQ had its worst week since 2020 this week. And you can imagine, as people and as institutions allocate away from riskier assets, crypto is considered by many to be the riskiest asset, also potentially the highest growth, but the riskiest asset for many people's perspective. And so they allocate away from it. And then that's part of the reason why the drop was so exaggerated. And of course, as Bitcoin and Ethereum drop, altcoins are just going to, in general, drop even more. But as far as whether we're looking at a multi-year bear market, I mean, no one can predict the future, but personally, I can say that I would be shocked. In the last cycle in 2018, when we went into a multi-year bear market, there wasn't really a whole lot you could actually do with crypto. There were maybe some rudimentary DeFi applications, some rudimentary NFTs, but you didn't have this sort of play to earn games you have now. You didn't have all these yield farming opportunities. I mean, we'll talk about some things later, but you can earn 20, 30% or more on stable coins, which is probably more than 30x what you'd get at a bank. So I don't see people leaving the space. And if anything, it could be some incredible buying opportunities. I mean, people who just got into the space, should only be so lucky as for things to drop more, because you can get back in at prices that you wouldn't have been able to get in at before.
At the same time, though, has anything really changed fundamentally in the crypto? Because we're seeing different price evaluations, but from the crypto side of things, do you think things are stagnant, or is everything just pretty much the same? Innovations happening, all ships are sailing, but it's just price and external factors are having its way right now. What are your thoughts on that?
Yeah, I think innovation is still happening. I mean, of course it is, and it's accelerating, if anything. The main thing with this dip here is that you have to consider that the projects that emerge as the next trend might not be the same ones that drove the market in the fall. So for example, in DeFi, we saw a lot of small ohm forks driving action in DeFi. It would be surprising to me if that exact same thing happened again, right? In the spring, we had a lot of pancake swap forks, and that was not what drove it in the fall. Likewise, we had certain layer ones really performed well in the fall and really drove a lot of the narrative in the crypto space. We had Avalanche, Phantom, Terra, Solana, those aren't necessarily going to be the same chains that drive things the next time we boom. Some of them may be, but they won't necessarily be exactly the same. And also, there's no guarantee that the layer one narrative is as big. I think that interoperability and layer zero, if you want to call them that type protocols, have the potential to be a new narrative in the future.
Do you think that there's going to come a time where, let's say, banks are going to take a look around and say, no, since we're all losing so much money, we got to do a little bit more riskier stuff, such as go into crypto and DeFi and get some amazing yields on the stable coins and maybe interact with certain projects to make sure it's secure and get great yields? Do you see that happening?
I think it's very possible. And you can look at, there are a lot of applications that are working with traditional finance institutions. I hope they hold off a little, to be honest, because I think it's going to kill a lot of our yields when they finally do get in. But yeah, I think they'll be looking at that. And I think one strong narrative actually that Bitcoin has, that you see people talk about occasionally, is basically the idea that Bitcoin is a way of capturing the amount of valuing the amount of energy that an institution or country can produce, because energy traditionally is viewed as one of the best hedges in times of inflation, because it's seen as resistant to both inflation and deflation. So I think one of the strongest narratives that Bitcoin has is basically that it represents the value of energy.
You just brought up energy, but then they say people still look for entertainment, right? Because a lot of people can be feeling the effects and they need some release. They need some relief from it. So they'll go out to the bars. And so alcohol could be something to look at, as well as, gaming, gambling, all these different type of things to give relief. That there's always something. So this is just one aspect where you're saying like, hey, still going to need electricity and energy. So something to keep in mind.
Yeah. And it's to be determined, I think, whether that narrative catches on, but I think you brought up a good one with the gaming thing, right? If we were to enter sort of an economic downturn, then it's possible that gaming could really shine through, especially play to earn gaming, because if people are looking to earn extra income and there's a way for them to get entertainment while earning a bit extra, then that could end up being really, really popular. I always say that I view play to earn gaming as, it's really proof of human work, because it's measuring the amount of time and effort that a human is willing to put into it, modified by various in-game NFTs. But if you view it that way, and it's basically a new way for people to devote their time towards earning a bit of extra money, like people did with Axie Infinity, especially in certain countries in Southeast Asia, then that could end up being, the sector that drives the most new users to crypto. And this isn't even my focus. My focus tends to be DeFi, but that seems very plausible to me.
Yeah, and there's different pockets in crypto. Obviously you can't be an expert in everything.
Yeah, definitely. And I think another value of this, and as we get into the sort of portfolio theory, I will say that right now the strategy I'm taking is I'm allocated mostly to stablecoins and then to what I would consider blue chip cryptos that I can be confident that will outlast any downturn, because like I mentioned before, the coins that were hot in the spring weren't necessarily the same that were hot in the fall. Sometimes the narratives can come out of nowhere. The gaming narrative, some people predicted it, but it, largely came from being minuscule market caps to being a major part of crypto. Likewise, NFTs were something that even very few people who were in crypto were interacting with in 2020, turned into probably the biggest wealth creator in anything crypto related, even bigger than DeFi in 2021. And it's very possible that the next big thing will come as out of left field. So my strategy right now is I'm taking stablecoins and earning yields on those. And we'll talk about some places you can earn 20 to 30% or more on stablecoins. And then likewise with cryptos that I would consider blue chip, like Luna, like Phantom, like Avalanche, earning yield on those. And then when the time comes, you can reinvest those yields and potentially sell some of those coins and reinvest it into whatever the next up and coming thing is. Also, right now when the market is tumultuous, it could be a great buying opportunity on low caps, but it's also the riskiest time, because if Bitcoin goes down below 30K, for example, then alts are just going to get massacred even more.
Agreed. And see, this is what I like, because I'm more of the degen. I do more of the extreme risk, and you're more of the long-term play it safe. So I think we're going to bring a lot of balance to the force here.
Yeah, totally. Well, funny story. Actually, I do a lot of the degen stuff with maybe 1% to 2% of my portfolio. Okay. And I find that helpful to keep me from trading the rest of the portfolio.
Oh,
so I'll I'll have my main positions are locked up sometimes with a 2-week unlock. And then I'll have a small portion of it that I'll just, like I'll throw into every new DeFi farm that comes up. And sometimes I make profits and I take some out and put it into the main ones, but that keeps me from over trading.
You know what this is? Have you ever played Super Smash Brothers?
Of course.
So have you watched the pros? I'm gonna pull up a screenshot right now soon, but have you seen the pros where what they'll do is they know how to play on the edge? Meaning, like, let's say they kick a player off the edge, and if you fall off, then you lose a life, whatever. But ideally, people naturally think, I want to stay on that platform in the center as safe as possible. The pros learn how to actually jump over the edge to secure the win and then get back to safety. And I think that is how I relate to this. There's certain people that love to play really safe on the platform. On the other hand, I feel comfortable taking on more risk, and I think I know what I'm doing. Hopefully, knock on wood, that I've learned how to feel comfortable going off the edge to secure the win, but make sure I still get back in time.
That's smart. Yeah, I mean, for me, I find the best risk reward, and it has to do with personal preference. The best risk reward is to get into solid mid caps. So I often don't trade as many top 10 or invest in as many top 10 things, but you can find things that are, say, top 50 coin that you can say this deserves to be top 10, or top 100 that deserves to be top 20. And those are the types of things that I like to go for, because those can still do 10, 20x, but it's not like a farm that could disappear tomorrow.
Fair enough. Fair enough. So we're going to give you all these different other options, but just to keep it fun for all the people that are a little bit nerdy like I am, Patrick, maybe you are a little bit too by playing these games, but this is what I'm talking about. Like the pros, they'll purposely hang off the edge, be like, oh, hey, you're trying to get back up. Now I'm going to deny that. So it's risky here, but it's also a way to sometimes play the game. But all right, so you know what we've been talking about, let's get right to it. So obviously not financial advice, but man, I'll keep talking about this. I like Liquid Driver, what they're doing on the Phantom side. Now, in case you don't know, you can see that Ethereum has been losing its dominance through, just even recently from January of 2021. We are 1 year later, and you can see how much of the dominance is lost. I probably attribute that to the high gas fees. A lot of people that are coming in, their portfolio cannot be justified of doing $200 to get in and out of a position, because that would mean that in order to even come close to having that be reasonable, you need like $10,000 swinging in a transaction. And people, I say the basic amount of people that are coming in are not looking to do that. So what are your thoughts about that quickly?
Yeah, I would say first, this is probably the biggest, if not one of the biggest stories in DeFi this year, is Ethereum losing almost a total monopoly on the DeFi space. And like you said, a lot of it's gas fees. A lot of it is also, and this is probably why the Ethereum gas fees are so high, is that Ethereum right now is sort of existing as a all-in-one chain. It's got a lot of NFT action, so you're competing with those people for block space. And then you can have other chains like Luna, like AVAX, now Phantom is turning to this as well, that are optimized for DeFi and are focused on DeFi. And if someone else is specializing in something, then it's almost, besides their existing network effect and the trust that people have in Ethereum, it's tougher for them to have as good of an experience as one that's solely focused on DeFi.
That's a great point. I didn't even think about that, but I'm going to be using that. Yeah, the fact is sometimes you may want to go to, let's say, a Walmart just to get up some basic supplies, such as an Ethereum. But then maybe if you want something that is super, super high quality, you don't think about going necessarily to Walmart. You go to that specific store, like a Gucci bag or whatever it may be, or a Rolex, right? That'd be like more of a special. So maybe there are certain blockchains that specify as a niche, such as, I like Phantom for being my DeFi chain. So we'll get right into that. And yeah, there's so many different farms. You can look at, they say that farming tokens typically go to zero. However, I think Liquid Driver has been holding up relatively well, especially with their different strategies that they have going on here, which is really cool. But likewise, if you feel that you want to be a little bit less risk, you could pair Phantom to a stablecoin. And a lot of people are afraid of impermanent loss. And I got to give credit out to Miles, because we were discussing a little bit previously, and we whipped out that impermanent loss calculator, and Phantoms, let's just say, hanging at $2. And if they're to lose 50%, your impermanent loss is only 5%. I think that's how it would work. Yeah. So then you can see, 5% loss. Okay. But then on the other hand, what is the risk reward? Well, you can see right here that you are earning 280% if you're at the time of recording, do phantom MIM and get paid in liquid driver tokens that seem to be not like dumping, but relatively holding its price. So this is something that's very lucrative to me. And I am loving this. This is what I'm looking for. When I talked about the edge guarding, that's what I see. So I'll just pull up the chart quick. But then I want to hear, Patrick, what are some of the coins that you're looking at, some of the LP tokens that
Yeah, well, totally.
decent?
Totally. And on the impermanent loss thing, I mean, if people do the math, they could find probably, as long as it didn't double or drop by 50% in more than in maybe 8 or 9 days, then you're going to come out in the green from the yield alone. And so, yeah, a lot of what I'm looking at now is I like these sorts of farms that have a layer 1 paired with a stable coin. I think that MIM Phantom pool might be the best pool I know of right now. So I like that. I'm really looking at the Cosmos ecosystem as well, because I see interoperability being a big narrative coming up in the future. So I'm looking at everything, all the core ones here. And we don't need to go through all of these now, but Atom, Osmo, and Juno, to name a few. Luna as well as its own chain and is also in the Cosmos ecosystem. And a lot of these, like you can see here, Atom and Osmo. Osmo is the main DEX on Cosmos. You can pair that with Atom and you can earn 100% APR. And then you can just reinvest that either into that same pool or into other Cosmos-based tokens. And it's performed very well over the past few months.
Yeah, so there's APR and APY, and that's a very difficult concept for people to kind of understand. I just say that APR is, let's say you just get reward, you get paid, you can do whatever you want with the money. But if you decide to reinvest it, then that's where the compounding effect happens. And it's really glorious, especially in times when, let's say Bitcoin's not doing what we want it to do. So this seems like that would be also a very interesting play.
Yeah, totally. And the one thing that's kind of fun about Osmosis is they actually airdrop you your rewards every day around noon to 1 Eastern time. So even though it's not really any different than claiming it, there's a psychological aspect where it's really fun to go in your account and be like, oh, I've got my rewards for today. What should I buy with them today? Like it feels like you're actually getting paid when they send you the tokens.
Nice. Man, I dabbled a little bit because Drake on Digital mentioned it to me, but I'll be honest, I haven't done my research. So I'm going to want to get more information from you on that. But let's just quickly take a look at other plays, maybe on Phantom. I know that you're more of the less risky. Miles pointed out that Yearn Finance has some really good yield when it comes to, let's say, MIM. So that is a stable coin, DAI 26%, USDC 21%. I would assume that for stable coins, that is incredible rates.
Yeah, no, those are some very solid rates, especially that MIM one. I mean, can you imagine if most investors in the world, if you told them they could earn 41% on something tied to the dollar, they would tell you that they didn't want to invest in anything else, right? Granted, those yields won't last forever, but that is an incredible rate. And if you're and the benefit of that is, it doesn't have to be permanent. It's just when we're in this weird period now where people are unsure and you have some stables that you aren't sure if you want to deploy, you can park it there. And then either you can start investing the yield. That's one thing that I like to do and I talk about in my channel. So suppose you put in $1,000 and you're earning 40%. That would be just over 400% a year, $400 a year. So that is a little over $1 a day. So then every month you have $30 and you can invest that into some low cap gem.
Yeah, and that makes sense. And like, let's say you get to a status of $100,000, right? And you're making 41% APY. What would that be roughly? Let's just say for even numbers, it's like $1,500. I'd have to do some quick math. For $1,500, and you're not touching that 100 grand, you could always take it out anytime. But with that 1,500, you could probably pay your rent. You could play some other degen major situations, buy an NFT that you're like, oh, okay, you can take higher risk, or you can decide to do different strategies where you auto compound some, but then also take on and that's where I think a lot of the fun comes around, right? Where, probably people come to your channel, they like that whole portfolio balance, different strategies, how to do it. You see other threads on Twitter that's popping off saying like, okay, I borrow here, I put it over there, I leverage here, I do all that. So it is a game within itself. Maybe it doesn't have a sexy UI where you're like, oh, this is so cool, like a play to earn game, But when you talk about money, and as you said, you get that airdrop, you're like, whoa, my number's going up. Really interesting, eh?
Yeah, exactly. And actually what you say with the degen things is interesting, because that is the strategy that I use. I do enter these degen farms. I'll enter almost anything. However, I enter it with yield. So the main position would be the MIM phantom pool or something comparable to that, and then take the yield from that, and that's going in the farm, because rather than sacrificing the one that I have strong conviction in for the long term.
So you're similar to going to a casino and you're playing house money. So like you double your money and you're like, okay, cool. At least I have my initial, and everything that I have right now is just bonus, and we'll play different strats.
Yeah, exactly. And I used to invest in the smaller ones. I've just found that it's, unless you get in early, it's, or you happen to pick the right ecosystem, oftentimes it's tough to predict which ones do well. And plus, when the market tanks, they can sometimes get hurt quite badly. So I found the better reward is, rather than buying something that they're giving away for free, if they're giving it away for free, make sure they're giving it to you. So for example, I am farming LQDR and then holding it and putting it back into the LQDR phantom pool, but rather than actually buying it, and maybe you're not getting the quick 10x that way, but it's a way to steadily grow your portfolio and still get substantial gains over the long term without risking that initial principal quite as much.
So you're taking on the approach of slow and steady wins the race. Like you're not getting necessarily the major double X and making moves, but it's this process of being patient, riding out the Bitcoin drops and whatever's happening, but at least you're stacking. And eventually when the market picks up, it's going to auto compound even faster. And you're willing to be patient is what I'm gathering.
Exactly. And I mean, I think the thing that, for me at least, that the way I consider it is that a coin like Phantom has performed, I forget what it was at. It's probably up over 100x in the past year or close to it.
I wouldn't doubt it.
And a lot of layer ones, including Phantom, even since the summer, went more than 10x. So for me, if I'm going to put a large portion of my portfolio in something, then I'd rather go in a major coin that has the potential to do 10x than sort of YOLO my portfolio into something small. And that's just personal preference, right? That comes down to personal preference. If someone has high conviction in a small DeFi project, then there's no reason not to. But for me, it's easier to build conviction in something like Phantom itself.
At the same time, though, another thing that is a major factor is portfolio size. Meaning, if you have, let's say, $10, right? Does it make sense what we're discussing? Even though it's lower gas fees, $10, maybe even $100, does it really make sense? Well, you're getting like 1%, even the amount of rewards is not going to be that substantial where you're like, okay, you get really excited. So if you get like that small amount, then maybe it is worth it to take on higher risk, or maybe it's just better to say, I don't have a problem on picking the projects. I have a capital problem. I need more funds to work with. So that may be looking at other details outside of crypto. Can you get more of a higher income? Temporarily, can you budget better, etc.? Not financial advice, but that's kind of the things where as your capital starts to grow, this is how you can really snowball it at a faster pace. People talk about the retirement funds, right? And they say, get in early, do as much as you can. Why? It's because the sooner you get in, the tail end of that investment actually appears, but it's only at the end that it goes parabolic and really shows off, but it still makes a great impact as time progresses.
Yeah, no, I would say
any thoughts of that?
Probably if you have, I mean, not financial advice, but if someone has even a few hundred up to, 1,000 or a couple thousand, probably you could make use of yield farms. But at least when I was starting out, and I think this is probably good for any size portfolio, but especially a small one, the best way to sort of break out into a different tier is to really research small and mid-cap projects hard and find some that have proven teams, have a good use case. Probably my biggest wins in terms of projects that I caught early were things where I used their app and I said, wow, this is extremely useful. I enjoy using it. Other people probably will too. So a good team, app that you think is solid, have good tokenomics, because that's important. There are some that are great apps but have terrible tokenomics, and they just have a history of, the developers have a history of making positive developments and constantly improving, which ties in with the product. And if you can find those, then that's how you break out and you get to that next tier.
But let's get into Osmosis, because I don't know that much about it. I got a little bit, but I want to know what the hype is all about, because I heard some names get thrown around, such as Juno, and I have no idea what that is. So could you help me out here?
Yeah, totally. So first thing that's important to understand is Cosmos itself.
Okay.
And are you pretty familiar with how Cosmos works, or
not really? No.
Or not? Okay, so basically, a lot of people think that Cosmos is a layer one, but it isn't exactly. It's more of an interoperability protocol. So there's different chains built on top of Cosmos. For example, there's Terra, there's Secret, there's Osmosis, there's Akash, and some of those, like Secret and Terra, are your traditional layer ones where anyone can build an application, even though they have their own unique features. But some of them, like Osmosis, for example, is a dApp chain. So it's a chain that's specifically for one application. In this application, Osmosis Zone is the main DEX in Cosmos ecosystem right now. And they're expanding to be sort of a larger DeFi hub for Cosmos. But then any chain that's built on top of Cosmos can use something called the IBC to very easily transfer tokens from the wallet on that other chain over to your wallet on Osmosis. So it's not even like bridging. It's like you press one button and it disappears from your wallet on your Terra wallet and reappears in Osmosis, or disappears from your Cosmos wallet and reappears in Osmosis. And so it's this really seamless way to transfer things that way. And then you can pool the various Cosmos ecosystem tokens here. There's, for example, CRO is another popular one. So crypto.com, that chain is built on Osmosis. And then Juno, that I mentioned, is a new layer one that just went live with smart contracts a few weeks ago. And basically, I like this one because Atom doesn't have native smart contracts where anyone can deploy a smart contract to Atom. They would have to build their own chain and deploy smart contracts to that. So Juno is basically built by a lot of people who are early Cosmos. And actually, a lot of the developers for Juno were very early in the Bitcoin community as well. And basically, it's a chain where anyone can deploy a permissionless smart contract. But the interesting thing with these smart contracts, and this is why I think it's next level, is that they actually are building cross-chain smart contracts. So you could build a smart contract on Juno that interacted with an application or wallet that was on a different Cosmos chain. And so now,
I'm gonna circle back. So I'll rewind because this blew my mind, and I want to make sure to get this right. So this is not a layer one solution. This is basically enabling a lot of different layer ones to get built on top. Now, Osmosis is kind of like that DEX, like, oh, you like this layer one and this layer one? Okay, we'll combine it. Here's your pool, all right in front of you there. So it'd be like the equivalent of, is that the same as, let's say, Polkadot, where you can have...
It is. It's similar to Polkadot, except they don't do shared security right now. They're building shared security. Cosmos took a different route where they started with sort of a minimum viable product where they had their Tendermint consensus that different people could build chains, and then they enabled the IBC last year. And then they're also building shared security where protocols can pay to have Cosmos secure their chain for them. But it's similar to that. So all these tokens you see here, or almost all of them, are their own layer one. There's a few that were bridged from other chains. So for example, AKT, Akash, is a decentralized computing network. So it's like a competitor to Amazon Cloud, but decentralized. And their token for their network, you can pair with Atom, you can pair with Osmo here, and then you can earn yield on it. And that's the cool thing. So these aren't just like, like crap coins that are just inflate. Well, a lot of them are inflationary, but they're not just copy and paste DEXs. A lot of these are their own networks with their own, sometimes physical infrastructure built out.
Dang. Okay. Now that you're telling that in that way, this makes a lot more sense, because I was like, all right, what makes this different? We already saw that the competition between all the Ethereum is losing its dominance and it's going to all these different ecosystems. Natural question is, what's so special about Osmosis? But based on everything that you described, that it's kind of just this hub where you can get the tokens and farm different layer ones that are on it. That is already really cool.
Can you hop over back to the DeFi Llama chains real quick, and we can look at all the different chains that are actually built on top of Cosmos? So if you scroll down here, just to start, we have Terra Luna. Then moving down in the top 10, we also have Kronos. A lot of people don't realize that CRO Kronos is built on top of Cosmos, and that's connected to the IBC. Then number 11, you have Osmosis. And then if you just go down a little further to 21, you have Kava, which just linked into the IBC recently. And then if you were to go down further, there's some other chains too, like Secret Network, that are a bit smaller. Number, it looks like 36 around there. So just right there, even just in the top 20, you have 3 chains plus one that's almost in the top 20 that's linked in. And then you can imagine as dozens and dozens or even hundreds of different chains link in, and they're built for purpose specific things. All of those layer 1 tokens will be available on Osmosis, and they'll be able to interact through Cosmos and Juno.
Whoa. So hold up. So you're saying that Terra is built on Cosmos?
Yes. So it's the chain is built using Tendermint, which actually some other chains like Binance Smart Chain is as well, but Binance Smart Chain isn't connected to the IBC. But Terra is built on Tendermint, and then it's connected to the IBC. So if you go back to Osmosis real quick,
okay,
then you can scroll down and we'll be able to see Luna and UST are available here. And actually some of the best Luna pools available are here. So for example, you have Luna Osmo is 82%, Luna UST is 58% here. And Luna Atom, I mean, look at that. You have 2 top tier blue chip tokens and you can earn 24% on them here.
Dang. Okay, I'm still trying to process this. So in terms of keeping it simple, is it kind of like you have the galaxy, so to speak, right? Because you kind of got like Cosmos, it's the galaxy. And what happens is you have a galaxy, but then you have Luna with the name Terra. I'm going to use my StarCraft knowledge here. You know, we talked about nerdy stuff. Well, there's like Terran, which I believe means like Earth people, right? So then it could represent Earth in the cosmos. So then you got the Cosmo. And then also now you got different type of layer 1s popping up. And then the IBC is what connects everything in the galaxy. And Cosmos right here is actually the thing that connects everything. And then this is the DEX that connects all the different layer 1s. Am I understanding this well?
Yes, exactly. So you could think of each layer 1 as a planet, and each planet might have different continents or have different cities and things. So that would be all the different tokens that are native to that layer 1. But then you have the IBC is like I'm not good with my space references, but you could call it like your starships or something that's actually connecting all these different planets together, right? And you can think of sort of network effects in Metcalfe's law. The more planets you have, the more valuable that network is, because you could have hundreds of different connections between all these different planets.
That's cool. The IBC, we got to come up with a good analogy. It could be similar to doing warp speed. Star Trek and all those, they have the warp speed where you take one ship to the other, but maybe like a teleporter, if they come up with a really good design for that, just visually a UI that's like, okay, IBC is this, you go in here and bam, comes out the other side. I think that would be really cool just for beginners that are stepping in, such as myself. And
maybe you could say that each layer 1 is a galaxy with different stars, and then there's a wormhole connecting them.
Oh, the wormhole. Isn't there? There's
also a bridge called wormhole, so it's a little confusing.
Yeah, I was about to say.
So 2 things that I want people to take away. First thing is, if you're new to DeFi, the easiest way for you to learn is going to be to choose 1 chain, maybe 2. You choose Phantom, choose Luna, choose Avalanche, something like that, and then just really become an expert in that chain, test out the top protocols, and then you can branch out later. But there's no need to get overwhelmed with everything at once. Second thing is, I don't know if we're in a bear market, but we're certainly in a bearish period. This is when the real gains and life-changing wealth is made, because you can research tokens when they're not getting a lot of attention. When everything is bullish, as soon as the token does something cool, it gets a ton of attention. But when there's fewer people in the space, it's actually an easier time to do research and find undervalued projects.
Yeah, and probably when you're looking at Twitter, you can probably decipher it much easier, right? Because there's going to be just the blatant shilling. You're like, does this really have any utility? And then you look at certain protocols or certain projects that are building hardcore, they have great use case, and then you dive in a little bit deeper and say, maybe there's something there. Well, Patrick, DynamoDeFi, pleasure having you on here. Man, we covered so much, and hey, I learned a lot from you. So thank you for taking the time to hop on the channel. Likewise, for the audience, what's the best way how to follow you?
Yeah, first off, thanks for having me on, Professor. For people who want to follow me, they can check out my YouTube channel at youtube.com/DynamoDeFi. Looks like it's on the screen right now, or they can follow me on Twitter at Dynamo_Patrick.
And just pulling this up. This is hilarious because I'm pulling it up and I see just Patrick, which is actually really genius marketing right there. And I see this, but it says right here, you're just saying tight, researching several projects today. So we went deep into that. So that's just hilarious. Well done on that.
Waiting for the right opportunity. Patrick squared. Yeah, it was really fun to be on, discuss some DeFi topics. I cover yield farming strategies as well as analysis of new projects on my channel. And I hope we can do this again sometime. This was a lot of fun.
Oh, we definitely are. Don't go anywhere. So definitely check them out. And thank you guys for tuning in. And we'll see you guys in the next video. Pieces.